Schedule A is where you list your itemized deductions to attach to Form 1040. You should itemize when your deductions add up to more than the standard deduction for your filing status. In 2024, the standard deduction is $14,600 for single filers and $29,200 for married filing jointly. Homeowners with mortgage interest and significant state taxes often find itemizing pays off. Enter your name and Social Security number at the top, exactly as they appear on your Form 1040. In Part 1, you report state and local taxes. Line 1 is for state and local income taxes paid during the year. Line 3 is for real estate taxes on your home. The IRS caps the total of these at $10,000 for most filers, $5,000 if you are married filing separately. So there is no extra benefit to reporting more. In Part 2, report home mortgage interest. If you received a Form 1098 from your lender, enter the amount from Box 1 on line 8A. This is typically the largest single deduction for homeowners, and the lender sends you this form automatically each January. In Part 3, report gifts to charity. Line 11 is for cash donations, meaning checks, credit cards, or electronic payments. Keep your receipts. You can only deduct what you actually paid during the tax year, and gifts to individuals do not count. Once you have entered all your deductions, review the total on the last line and attach Schedule A to your Form 1040. Fill yours out free at FormsPal.com. This is general information, not tax advice.